Joe Tigay standing by, portfolio manager of the Rational Equity Armor Fund. Joe, you earlier said on our program that it was going to be a show-me earnings season, and for tech companies with enormous growth, some of them are not showing enough guidance and not showing enough conviction about sustained growth and paying the price for it. But that's not the case for Alphabet. So should we assume Facebook will do the same after earnings, or is it already happening today?
It's a great question, great point. And yeah, really what I mean is the market saying, show me the goods. We've got these high PE ratios. We're expecting this hot economy. Show me you're going to prove it. Show me you're going to be worthy of these prices that we're putting you at. And in a lot of cases, it's been like a really hard match for these companies. Look at Microsoft, for example. They had a great quarter, great numbers, and the stock's getting punished for it because it's actually been priced accordingly. And we've been talking about, you were talking about in the previous segment, like when are we going to see this market get some gains? Well, maybe this is just part of the consolidating process. The market had these high prices. We had this fantastic 2020. There's two ways to correct, of course. You can correct by price, just pulling down really fast. You can also correct by time. That'll allow all the moving averages to catch up with itself. It seems like right now we're seeing a correction by time. That, of course, is coupled with the VIX coming in below 20. So that's what the market is telling me, and that just seems like a really hard bet. Now, Alphabet, same type of a stock. Looking at these advertising dollars, that's where Alphabet really killed it. Is the street expecting Facebook to do the same? I think the Facebook's going to be no different than the rest of these companies. We're really going to focus on this guidance. Really need a blockbuster quarter to really get rewarded. Otherwise, it's going to be a hard sell to get a big increase in the price.
So what's the best way to trade that, Dan? You don't want to bet against it, but you maybe don't want to expect a big breakout move on top of what's already happening?
Yeah, I mean, I wouldn't look down upon somebody looking at a call spread or something in Facebook, just maybe getting a duplicate of what Alphabet happened. For me, that's probably a little bit harder call. I would rather just to look at the reverse side, both selling. I look at selling some volatility, look at the name via selling a put spread. Could be a winner even if Facebook goes lower. Volatility should come in. So for me, I'd be looking at the May 300-290 put spread. 300 is an area where it had a little bit of resistance before. I think right now previous resistance could turn into some support. I'd like to get into the name there anyways. I can sell that put spread for about 310, at least this morning. And of course, like I said, if it goes lower, I'll be happy to be long Facebook at that level. And if it goes higher, yeah, I might miss out. Buying a call spread could be better, but I think this is a higher probability of success trade.
Okay, so you're going for a high probability of success here, selling downside. Seems like a very reasonable, logical argument here for the trade, given that we just saw these great numbers for Alphabet, Facebook moving with it. Odds that this thing suddenly breaks down, I mean, just hard to imagine unless there's some massive market event. So it makes sense to me. Joe Tigay, thank you, sir. Appreciate it. Portfolio manager
Thanks for having me.
Of the Rational Equity Armor Fund. Yes, sir.